So as a small business making 30 crores in revenue, 10 crores in profits, which requires a lot of reinvestment, how should I go about planning my tax structure?
I've got a very simple framework which we use, which is in any wealth or tax structure, if it is not bulletproof, you are setting yourself for trouble. So what do you mean by bulletproof? It needs to be simple, aligned, and exit efficient. You must be able to explain to an 8-year-old kid in 2 minutes. Period. That's the version of simplicity. Anything else? No. Second, aligned. It must be aligned with what you want, with the geography of where it is being set up.
Lastly, it has to be exit efficient.
Exit efficient, right? Exit can happen under 3 circumstances, which is you sell your venture, there is a succession happening, and you shut it down. In all the 3 circumstances, it must be economical to deal with. Any structure which does not fulfill all the three on three, you're setting yourself up for trouble. Again, let me go back to that 5-step framework. Now you are running a business. Now, the first vision is, do you want distributions? Do you want salary? That's the first decision you want to make.
What does that mean?
So distribution is dividends being distributed by the company, apart from a nominal salary. Most of the professional services firms depend on that. Or if you want to run it as a corporation, where I will only take salary, I won't take distributions. Because salaries are fully taxed at the maximum marginal rate. That is a challenge which a founder has. Now, if let's say you say, no, I want higher chunk of distributions, I'm still early days in my life, I'm creating personal wealth also. In which case, a company structure is not appropriate for you. You should set it up as an LLP, where you pay a flat rate tax of 30 odd percent tax, but you are not taxed in your personal. And you also have the flexibility of reinvesting the money back. It's only and there are no tax implications here. If it's in a private limited company, as you said, you will pay 25%, and then when the dividend goes, I get taxed at a full rate in my personal income, and I bring it back, it again comes in as capital. There's a host of compliance. Here, that's not the case. So that's the first level of flexibility and principle which you decide.
Which is to understand which type of company you should set up.
Constitution. You wouldn't want to use the word company, because company is a type of constitution. So proprietary concern, LLP. Of course, India, unlike the US, we don't have too many options here. It's just LLP so that gives you the choices of options, which a regular partnership firm or a limited liability partnership firm. In terms of when you get into the framework part of it, right? Would you want to have newer partners coming in? You want to keep it very simple, right? Because it's only going to be the existing set of. Are you open to higher compliance so that it limits your personal liability when a venture happens?
Yes.
Okay, so you want limitation of personal liability.
Limitation of personal liability is, by the way, guys, in simple terms, if the company gets sued, my personal assets should not get frozen with the company's assets.
Exactly.
Am I?
Absolutely, yes. So if this is the journey, then you only have one option.
LLP.
That's it.
I love the fact that you've limited my options. That makes it so much clear.
Right amount of tax is a function of 3 things. What you want to do, where you want to do, and what matters most to you. That intersection will give you the right amount of tax, and you must make peace with that number.
You must make peace with that number. Yes. That's, I think, the highlight of this podcast. You must make peace with that number.
I think that's alignment at its peak. Alignment is not the least outflow. It is the highest impact on yourself. And that need not necessarily be the lowest tax. It could be the highest opportunity also. I think that's a mindset shift which people have to come to terms with.
Divakar, why don't you start a company that just helps people comply with all the principles that you just mentioned right now?
See, I mean, thanks for the feedback, Ganesh. This is what we do in our advisory practice. But over time, you realize with the advent of technology, value enabling is losing sheen, and value creation is where the real alpha is. So in 2022, we started piloting a model where, using all these frameworks, we thought, why can't we solve larger problems for investors in real time? And that's how we built Brahma by DVS. And we chose the name Brahma because Brahma means creation. And we believe wealth is not something which you protect, it's something which you create. Because protection is driven by fear and it's a finite game. And creation is driven by abundance and it's an infinite game. So here, we don't just enable investing, we educate, engage, and fulfill that journey. And we've been incubating this for the last 3.5 years. And I'm glad to share we've done almost $1 billion of business in this phase of time. Looking forward to, having a much larger impact through this platform.
Perfect. If this clip gave you value, please subscribe to this channel so that we can keep bringing you game-changing business insights.